Hey everyone, Coach Michael here from the Roofstock Academy, coming to you from Sacramento, California. We're about to take off in our van down to the Southwest. Very excited for that trip. But I wanted to talk to everybody today about bank accounts and how to set those up with regard to your investment property. So this is by no means a must or even advice. Simply going to share with you how I've set it up throughout time and what I figured out works a little bit better each step of the way. So when I first started investing, I owned a couple single family properties in my personal name. And so I had just a personal checking account. And that was actually commingled with all my other regular checking account stuff. So I would have my paycheck from my job come in there, and then rent would get deposited into that same account. And that's an okay way to do it, but it gets definitely muddied. As I go back and look at the end of the year and sort through, okay, well, what was income that was from my property? What was income from my job? What was expenses that I paid for the property versus just a traditional expense that was being paid out of that account? What I then did is said, okay, well, let me just set up a separate personal checking account exclusively for real estate. What a lot of people fail to recognize is that your property manager, if you're using property management, is likely going to pay a lot of the day-to-day expenses associated with the property. Now, what they're likely not going to pay are your property taxes and your insurance premiums. The way that my property manager operated, she collected the rent, she paid herself the management fee, she paid the HOA fee, she paid all of the expenses associated with that property that were in her realm, sent the rest of the money to me to now this separate dedicated checking account. And then what was left over was for me to pay the mortgage, to save for taxes, to save for insurance, to save for CapEx and future expenses. So you really got to get good at getting a handle on, okay, well, how much money is actually cash flow? Because I think what a lot of people have happen is if their typical expenses from their property manager, say, are $200 a month and their rent is $1,000, well, they get incoming money at $800 and think, great, I made $800 this month. Well, not necessarily. Remember, some of those dollars are already spoken for. So you should have a pro forma anticipating what your actual expenses are going to be based off your property taxes, insurance, and anticipated expenses. Save those dollars in the bank account. And if you'd like, then you can move the cash flow, so to speak, into your true personal checking account that you use for a day-to-day basis. And that's what I did. So I always had money sitting in that separate checking account because when I got my property tax bills once a year, there was enough money sitting in the account to just pay for that. And when the insurance premium came due, there was enough money sitting in that account to just pay for it. So that's definitely something that I like to utilize, is a separate checking account. And it can be a personal free checking account. It doesn't need to be fancy, but just to have all of the expenses paid from and all of the income going into that specific account. Now, that was for properties held in my personal name. So once I moved those properties into an LLC, I had to open up a separate business checking account. And the bank needed the articles of incorporation for the LLC and the operating agreement for the LLC in order to open that separate account. But now I treat that account almost exactly the same as I did when it was in my personal name. Totally separate checking account. The money from my property manager comes into that account. All of the expenses that I'm responsible for get paid out of that account, and then I can pay myself as well. Now, if you've ever looked into LLCs, you may have heard of something called commingling. So what you definitely don't want to do is have the LLC funds go into your personal checking account in kind of this fluid motion. From what I was told, getting money into my LLC account, then the LLC account pays me a distribution of whatever that needs to be of my free and clear cash flow. But again, all of the LLC expenses get paid out of that LLC account. And so there's different ways to structure this depending on the number of LLCs you have, or C Corps or S Corps. Definitely not going to get into that in this video, but just wanted to share with everybody what I did when I first got started, because I think a lot of people also fall into the trap of saying, oh, I have to have this LLC before I started investing, and how do I put the cart in front of the horse, kind of a thing. So just look to structure your bank accounts in whatever way makes the best sense for you. But I've found over time that keeping everything related to the property totally separate and distinct, while might not necessarily be a legal requirement, especially if it's in your personal name, just makes things a little bit easier come tax time. So I hope you enjoyed this video. Leave us a comment if there's additional things you'd like to learn about. We look forward to seeing you on the next one. And as always, happy investing.